What's up, guys? JJ Fade 23. Hopefully, you can hear me. I'm going to go over AVGO earnings trade. Let me delete all this crap so we can start from scratch. As you can see, though, remember, guys, the first target to the penny touch, 261 fib, but I'll show you how we got here. All right. First of all, you guys, obviously, it's been one of the strongest stocks in the market. I mean, sometimes when you see stocks that are going like this below the EMAs, I'll drop down to the bigger time frame, see if they, and then see what happens, you guys. I'm always searching for the time frame that shows me this. All right, yeah, I'll trade setups on the EMAs if they're here, but you see how this is going below my EMAs almost every time. If that's the hourly chart and I'm looking on this, I'll go to the 4 hour chart and see if they line up better. If it's the 4 hour chart and they're doing this going below the EMAs, I'll go to the daily chart. If on the daily chat we're doing this, I'll go to the weekly chat, and then eventually you find where we're banging off the 2134 beautifully. But that has nothing to do with this video. Obviously, you guys, the breakout level, we curled off the weekly 2134 again right here, which was beautiful. And then earnings. So Friday, we have an earnings gap up. Way, way over all-time highs. All right. So, guys, like I said in the chat room, okay, when a stock gaps up this high on earnings, there's multiple ways that I'll trade it. All right, you have good earnings, good outlook, amazing company, strong stock market, all the things I want for to long. Right? It's not like the market. It's not like the overall market's tanking and this is gapping up. It's not like it's a shitty company just gapping up at the resistance and sell off. We're at a breakout. So let me show you first. All right, what I'm talking about. If you go back and look at stocks, all right, say for example, right here. Look at this is exactly the same kind of setup, right? It gapped up over earnings, it broke out, and then it gapped up on earnings. And then look, a lot of times you get a 2 or 3 day run before it pulls back. But now, guys, this was just like this. Look how big the gap was. One of my favorite setups on gap up on earnings is when I'm going to draw this. Pretend this is the daily candle. All right, is when the stock doesn't gap up though too far. Right. Let's say we open like right. Let's say we're opening right here. Okay, let's say this is the open level right here, or maybe a little closer to the breakout level. One of my favorite earnings plays. Remember, I'm always trying to imagine what the daily candle is going to do. All right. One of my favorite is when we go like this. We just make one of these, a bottom tail like doji candle for a daily candle. So if we gapped up on breakout and we're close enough to the previous resistance levels, I look for a dip at the open long at this level on my triggers or extension away from EMAs and then take it back up and then possible swing. This gapped up way too high. So guys, you're picturing what the daily chart is doing, right? With this candle probably wouldn't look right, if this went like this. It's not going to come way down here. This candle wasn't going to be like this. You weren't going to get a freaking candle that looked like this, right? You weren't going to get a doji with this big of a fucking bottom tail. Because by the time all these people trying to long get bagged way down to here, it won't even be able to recover. We'll just probably keep tanking, right? So, what else can we do? Well, next thing we do, we can mark off 200 because that's a big psych level, all right? 200. Is 200 close enough? 200 was still pretty far away from the open price here, right? You're going to dip. It's possible it can go like this. Possible we could get a dip back to 200 psych level and then start to push back up. So, my plan was to either, if we flush hard towards 200, that's where I would look to long. If it breaks 200, I don't know if I would long. I need too many. This is big sell off, right? Probably wouldn't be able to recover. So, plan number one, if we flush hard to 200, I'll look for a long there. Now, plan number two, 5-minute EMAs, pre-market data on. This is the same setup in one, okay, guys? We're watching the 5-minute EMAs. See how stocks, when they're trending nice, at a nice angle? Look, this is sideways. When stocks are going sideways, you expect them to break the EMAs because they're tangled. Now the angle is up, right? When the angle is up and the EMAs are stacked positive, there's two ways you can trade this earnings. First, you can wait for a wick down into this just exactly like it did, like J-Star took. Dips, boom, you start whipping back above the 21.34, you long. Now your stop goes at lower day and you can fucking scale out or you can hold it for 2 or 3 days, whatever, it's earnings. Or the other thing, so it's either the 5 minute EMA under, over, or wick off the 5 minute EMA, or what I like to do is mark the open price. As soon as we open, we flush. If the flush isn't that crazy, like a just big dump, it starts to reclaim. As soon as we go back through the open price, long. So my entry is right here. Boom. As my entry on the day. And now I already know I'm risking right here. Okay. So this is my stop. Because now I'm imagining what the daily candle is going to do, right? So what did the daily candle do? We got a little dip. Now I expect to see a big green bullish candle, and then maybe one or two more candles before we come back or go sideways while the short-term EMAs start to catch up. Because you can't. It's hard for it to get too far away from the EMAs. Eventually, it's going to consolidate. It could consolidate for 2 days now before it breaks out again, but these are going to want to catch up. So, but the point is, you guys, you're either looking for the wick off the 5 minute EMAs or dip and reclaim through the open price. Stop goes at low of day, just below low of day. Now, a couple traders in the room made a mistake. Why did they make a mistake? They didn't take any off and then they stopped out here. You can't stop out here. Why is that? Because, guys, look, it's natural to come back down here because why? Look, stocks move higher low position. Look, a low, a higher low. A low, a higher low, a low, a higher low, a higher low. So you don't want to be stopping out above lower day, especially, you guys, when if you put your fibs on, you're stopping out where you should be adding or longing. This is higher low position, right between the 61 and the 78% fib. It's beautiful. So unfortunately, some people did that. I kept my stop right here. I wasn't at my computer to add, but once we got this and reclaim, now we're cruising. Now, how did I find my first target? Using fibs. You guys mostly know all I do is use EMAs and fibs and price levels. So I always use the most recent swing high to the most recent swing low. So to get the fib targets, I just go like this. This is the swing high, this is the swing low, we broke out. So my target was up into this first 61 fib, which I took some off. The way I had it set before was like pretty much penny touch, and I probably didn't set it perfectly, but anyways, we were talking about it in the room. And for those people who talk shit about fucking after the fact Johnny, we were already talking about these in the day while it was heading there. I already had it set up like that. Now, guys, if you missed the 5 minute EMA setup or you missed the buy through the open level or whatever, as you guys know, the next best setup is 10-minute EMAs with the pre-market data off now. Pre-market data off. The first, guys, when you have a stock like this that hasn't touched the 10-minute 21.34 all day, anytime you get a big flush towards it, it's going to bounce. Almost 90% of the time, especially on earnings, especially with a breakout, no resistance. So this would have been nice if it happened a little earlier in the day, like maybe over here, touched it or something. But now we got a flush at the end of the day, which didn't quite get to it anyway. So I'll be watching these now as my guide. 10-minute EMAs for my guide for the continuation. Now, the other thing I wanted to show you, if you don't like to use your fibs that way, you can use fib extensions this way. This way, on fib extensions, you would use a flag kind of pattern. The problem with this one is like you have a kind of a flag here. This whole thing's like a flag, like a pole and a flag and then breakout. Or this mini tiny pole and flag. So I would probably do something like this. If I was going to do fib extensions, I would probably go like that. Now see, you might have took profits a little earlier at the 161, and then that would be even higher. You can't see it in the screen now, but so basically, guys, you have the pull, then the pull back to where it flag broke. You might put it here too, I guess. I don't know. This one's a little different because it's kind of like flag twice. It had a pole and then a flag break, then a flag break. So you could put it like this, I guess, right here. That's the cleanest looking way. Right? Now, obviously, you're not going to take profits at this first one if it gaps right up to it. But then the next one will be up here. Plus, that's getting close to the $0.50. I don't really like to use fib extensions, really. I like to do them the way I showed you the first time as much. Sorry. The way I just showed you a minute ago, I like to use that better. Where I just use the most recent swing high, the most recent swing low, and extend them up this way. And that way there, I just like them better like that. Now, this will also put me way up here if it wants to really keep going on earnings. We'll see. But at this point, guys, I'll just use the 10-minute EMA as a guide. I'm not going to get out of the trade. I'll scale out in pieces at big levels like this. I took some off near here. Now, if we kept pushing to 250, I would take some off right there. And then next target would be 275 at this fib, and then obviously 300 if it kept going. Otherwise, guys, I'm using the 10-minute EMAs as a guide. If the stock ends up going like this, tomorrow or 2 days, 3 days, whatever, if these 10-minute EMAs break, if they reclaim, it's fine. I don't care if they snap a little and reclaim, but if they break, then pop back up to the 10-minute EMAs, and then the 10-minute EMAs become resistance, then I'm going to get out of the trade. You don't have to do it like that, but, I got a little diamond hand syndrome, so I don't like to get out on too much pussy shit, but you can scale out, you can do regular stuff too, guys. Whenever it makes the way a lot of people scale out, is just moving this stop on breakouts, right? So you long, stop goes to the bottom of the day. When you make a new high, all right, as soon as you break that high, your stop goes to the last pullback. So you move the stop up, all right? Now, you come up here, you come down. If we break out again, if this price action breaks out again, then you move this stop to the last pullback, etc. But guys, remember, you can't move your stop up until you make a new high. A lot of people do this. A lot of people move their stop up before we break out again. Like right here, for example, all right? Your stop is down here. Now, it made a high, pulled back, made a new high. So you move your stop up. But now, until you make it, let's say you put your stop somewhere like over here randomly after, and the stock just dips down, stops you out. You can't move your stop from here. We made a new high right here. Stop goes to the last pullback. We made a new high. Stop goes to the last pullback. Now we came up. We pulled back again. We have to make a new high again. This has to go like this. Break out again before we can move our stop up to here. And then you just keep trailing like that. That's a basic way to trail. It works pretty good because you have a breakout, and then that helps you get further away from the last pullback. If the breakout doesn't become a fake breakout, you have a good chance not to get stopped out. So that is the whole trade. It was an easy trade. We've done this a million times on earnings setups now. I love earnings that become daily breakouts on really good stocks. When SPY is strong, the overall market is strong. I like it. You have all things in the right direction. Pretty much we're in a Santa rally, Trump pump, where everything's working good. All good setups are working. It'd be great if it stayed like this all year round. But remember, guys, when the market does change back to normal market, how do you try to emulate a Trump pump and a Santa rally? Well, that's easy. You have to, now instead of just taking random stocks, random chart patterns that you find, you have to find the hot sectors in the stocks with hype, right? Like when we had the oil, or we had wheat, or we had friggin' AI. So instead of trading random stocks, you're searching for swing setups in the strongest sectors, right? This is kind of emulate what's happening right now in the overall market. Stuff could be tanking, but if you find a strong sector with hype, like AI, plus the market's doing all right, you're going to have a much better chances of your setups working than just trading some bank stock that has a flag pattern when the bank sector is tanking and the market's not that strong or something, So that's the way I do it, and it helps my technical patterns work much better than just taking random stocks. It's like Tesla, right? Why would you want to trade something else when you can trade Tesla? The whole world knows that Tesla's going up, 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 has tons of hype. So why are you searching relentlessly at night for different setups when Tesla is just rocking to the moon, giving you setup after setup after setup? And again, if you use I haven't traded it perfect by no means, but if you use the 10-minute EMAs, guys, we talk about this every day. If you use the 10-minute EMAs, it's like a freaking cheating, right? Especially when stocks are trending and breaking out, right? Look at how many setups you've had since we broke out here. First, you curled off the 10-minute EMA's perfect right here. What I tell you, you break out, first pull back to the 10-minute 21. Boom. Flag off the fucking 10-minute EMA. Boom. Flag off the 10-minute EMAs. Boom. It's just over and over again. You lose them, you reclaim them, go long again. And guys, remember, try to spot the EMA that it likes the best. Right? Look at this thing's been coming back to the 10-minute 50 a lot. Over here, it was coming back to the 34. Then it came back to the 50, the 50, the 50, the 50. Look at this. The 50. I mean, the 50. Guys, I don't know if it's algos that cause that or just a lot of traders using this EMA or what, but I can spot these a lot where I'm like, wow, this stock's pulling back to this EMA all the time. And you can pretty much go through the chart and figure out which EMA that is on different time frames that it keeps coming back to and see if you get a trigger at that EMA, right? So, I mean, like, look at this candle the day we went long right here. I mean, this was just beautiful. Beautiful. We had the breakout, new high, first pullback to the 21. It didn't clump close enough right there. We got this bullish one near the end of the day. Boom. Bam. You see this candle right off the MEA's long. Stop below. Then we got a huge run. And guys, history repeats itself. Look what Tesla did. This area here gapped up, sold off to the 10-minute EMAs. This area here gapped up, sold off to the 10-minute EMAs. So you have to be able to recognize this stuff, what's happening. Right? You're not just looking at random charts like, you need to have a system so you can recognize repeatable things over and over again. And that's why, like, dude, I'm not the best trader in the world. I just know my system like it's the back of my hand. I know exactly how stocks trade around my system. That's all there is to it. Not because I'm the best trader, but because I've been using the same system for years and years and years and watching how stocks move around them. So if it's not doing the exact setup that I want to see on my system, I don't take it. There's no random trades in my setup. It's just like AVGO at the end of the day Friday. I mean, MSTR at the end of the day Friday, right? Look, MSTR at the end of the day Friday. Guys, where is my setups in my system? Well, let's see. Gap up, first pull back to the 21. Poop, thank you for a decent long. Now, the stock market opens. I don't have a setup right here. Yeah, I could have taken that on the over the 50, but I didn't like that we got a fake breakout first here. It's coming down. This we're talking about Friday here, right? Friday, we gapped up. We pulled back to the 10-minute EVAs. I went long. It ripped up here. I didn't take any profits because I wanted a strong move. I got stopped out. That's fine. Now, I don't trade this midday crap because I probably would have got stopped out again, right? If I traded midday, I probably would have taken this trigger candle right here, not sold into this push again, and got stopped out because this is what happens during this time of day. This is what you get. Fake moves that don't work good. No, I'm gone. I'm doing real estate stuff. I'm chilling. And then guess what? I come back for power hour and I say, holy shit. Look at this setup right here. Look at this trigger candle right on the 10-minute EMAs. We made another high. We're making higher lows, higher highs, higher lows, higher high. Now, we got a really good trigger candle right here. And we're starting to curl off the 10-minute EMAs again. And I know this is power hour, so the setup could work better. Long, boom, instant $8 move, and now I'm holding that overnight. Why? Because this keeps me out of this crap. Rules, time of day rules keep me out of this crap. So what? I lose 1 hour right here. Boom. Guys, I took this long right here, risking $2. That's 1, 2, 3, 4. Who knows where this thing gaps up to now with the NASDAQ, with this S&P 500 stuff going on, you know? So, yeah. I mean, yeah, so just build your setup. I don't care what you use. You don't have to use the 10-minute EMAs. You can use whatever you want as long as you know it works good with your system and you can build your system around it and give you good risk reward trades that work. And then eventually you start to realize, okay, now I'm going to line this up, right? Why am I trying to long this 10-minute EMA setup in the first place? Why? Because it lines up with the daily chart setup that I liked. Look, hammer candle off the 21. Now look what happened. We have a flag break here. So we first of all, we came back to the 2134 again. We have a nice hammer candle here. We pushed up. We broke this downtrend. We came back. We held it. Now we have the daily 8 sitting right here in this downtrend. So this is a place on the daily chart that I would long if I find a good daily setup. I mean, a good intraday setup. Well, where's a good intraday setup? Right fucking here. That's it. That's it. All right. I don't want to make this video too long, but that's just the way it goes. Build a system that you can understand and see clear every day the same things over and over again. It keeps you out of all the other shit. All right. See you later.